First one is about Tata Consumer. Interesting chart. I think on the early time frame, the stock is now showing signs of trying to break back above its swing resistance. 496, 497 was apparently the previous swing high for Tata Consumers on the closing basis as well on the early charts. So I would expect that some degree of resurgence could come back into this name as well. Would suggest a buy on Tata Consumer for a short-term targets of 400, 510 and stoppers could be kept at 485. I would term this as more of a low risk trade. For the other high risk trade, it's a sell on Piramal Enterprise. Again, a chart which I think has been just about dragging lower. Week after week, we've seen weakness coming into this stock as well. Yet again, a break below its critical 50-day moving average support as well. So it was already below its 200 DMA. Now the stock has broken back below its 50 DMA as well. So I would sense more weakness, which could probably come in line for this stock as well. Sell with a target of 1200, stop loss at 1280.
All right, and those are the high risk and low risk idea coming in from Kunal this morning. Vivek, good morning. This is Cheryl on the other side. What are your high risk and low risk idea for our viewers?
So I think these events come wise in the market overall, which leads to volatility. I think these are the good time to build up good quality portfolio stocks. And we all knew that US election is due and the volatility will be there on the runway to election. So it's not something new which is happening. So I would suggest for a long-term investor perspective, someone who wants to play for a longer swing, there's a great chance opportunity for you to build up a nice stocks in the portfolio. I would recommend look at cyclicals now because in this kind of an interest rate regime where home loan rate is literally at a all-time low and the FD rate is also very low, I think cyclicals will do phenomenally well over a period of time. So I would suggest look at the residential real estate play. I think overall the demand offshoot in the residential real estate has gone up, and maybe it's a build-up demand which was there, which is now getting executed. But I think this is going to continue for a long time now. The real estate sector, which did nothing in last 12 years, I think this sector is poised for some kind of a major long-term rally. So I would say the companies which are focused on residential play, which could be say Suntech, which is a Mumbai-specific builder, or Oberoi Realty, or Sobha. These are the guys who are very focused on residential. Last time when we discussed, we talked about Godrej Properties, but now this stock has become very expensive. It has gone up. But I would say that at every fall, building your portfolio for real estate play is going to be a very good strategy for long term. So these are risky strategies. If we talk about non-risky strategies, are again companies which have some value embedded and now they are getting into the growth path. Say for example NIIT Limited. Now this company has been in education for a long period of time. They did some strategic mistakes. Now they are trying to recover from those mistakes. They have phenomenal cash in their books, and with the focus on e-learning and online delivery, I think NIIT Limited is one stock which should always be there on your radar for your portfolio build-up perspective. And the evergreen stock, Dabur and Reliance, I think these are the two stocks where every time you see a fall in the market, you should find out opportunities to grab these stocks for your portfolio.